Yes. Hello. Is there someone already recording na yung meeting? Hello? May nagre-record na ba? Or
Meron na daw po.
meron na? Okay. Thank you. Okay, so let's start. Okay. So may libro na kayo?
Yung iba lang po ata sir, yung sa online po bumili. Pero yung sa JPIA po, wala pa po.
Hmm. Paano yun? Wala kasi ako mabiling PDF. Yung libro na to, hindi ko alam kung bakit. Unlike kay Balix, napakadaming PDF na pwede yung mabili. So yun, wala akong mapipresent. Wala akong may share screen. So, ano yung mga walang books? Hmm, meron ba sa inyo na may PDF or yung in-scan na? At madami kasi ito kung i-scan ko. So kung wala, siguro ano na lang, catch up na lang yung mga walang books for the meantime. Hindi kasi ako sure kung same lang yung 2019, but pwede natin i-try. Okay nga, can you please share yung PDF? Miss, ano siya ba siya? Miss Ral, please. Yung mga iregs pala, nandito na ba sila? 7 yun. Si Miss Discutido. Nandito na ba yung mga kasama mo na iregs? Nandito ba siya? Okay. Okay, so I think magsimula na muna tayo. Samantala. Paki-share na lang Miss sorry, Miss Veronica kung okay na Pero for the meantime, start na muna tayo. Okay, so kung may question, just raise your hand lang. Gamitin lang natin yung function dito na malakas pa yung hangin. Okay. Gamitin lang natin yung function na raise your hand. Okay. So let's start. Chapter 1, current liabilities. So liability is a present obligation of the entity to transfer an economic resource as a past as a result of past events. Okay, so sabi dito, liability is a present obligation of the entity to transfer an economic resources as a result of past events. So, sa definition na to ng liability, dito rin nakalagay yung tatlong requirements para ma-recognize siya as a liability. So, number one is present obligation. So, dapat there is a present obligation. Number two, uh, there is a liability for the entity to transfer an economic resource. And lastly is yung this should be a result of the past events. So yan yung tatlong uh, okay, one, two, three. Okay, so yan yung tatlong uh, qualities na dapat meron yung isang transaction for it to be recognized as a liability. Okay, the definition of a liability has the following three aspects. So, obligation, ito na nga yun. Transfer of economic resource and present obligation as a result of past events. So, let's start with obligation. So, an obligation is a duty or responsibility that an entity has no practical ability to avoid. So, meaning, an obligation must be uh, entity's liability that the entity has no practical ability to avoid. So, wala siyang ibang reason para maiwasan to. It's only to pay it para mabayaran lang. Okay, let's proceed. An obligation is either a legal obligation from which this is a liability that is arising from a contract, a legislation, or other operation of law. Okay? And letter B is constructive obligation. So constructive obligations is an obligation that results from an entity's action. Oh, example is the past practice or published policies that create a valid expectation on others that the entity will accept and discharge certain responsibilities. So for letter A, legal obligations are usually executed through legislation or through a contract, while letter B is more of an informal obligation on which umaasa lang yung party or the other party sa entity na magko-comply siya sa kanyang obligation without the presence of contract or any legislation to support that claim. Okay. So question dun sa first page. Page 1. Yes, page 1. Walang question? Okay, tuloy tayo. So, an obligation is always owed to another party. However, it is not necessary that the identity of the party is known. For example, an obligation for environmental damages may be owed to the society at large. So, an example dito is uh, environmental damages. So, it only means na you cannot specify kung sino yung party na on which the entity is liable. So, meaning, liability can be established even the other party is unknown. So, whether unknown kung sino yung babayaran mo or unknown kung sino yung magbabayad sa'yo. So, and pwede natin balikan yung liability, qualities of liability para ma-recognize natin siya as a liability. Letter is obligation. May obligation ba? Yes, that is to pay environmental damages. Letter B, the transfer of economic resource. Yes, kailangan niya magbayad because of the damages. And letter C, present obligation as a result of past event, which is the conduct they in which they damage the environment at the process. Okay, so hindi naman sinabi dito na dapat identified kung sino yung babayaran at kung sino yung magbabayad. So question, nagaling doon. Okey. So, if wala, lampasan na natin yung mahabang stanza na 'to. Do'n tayo sa paragraph number 3. There can be instances where the existence of an obligation is uncertain until that uncertainty is resolved. For example, by a court ruling, it is uncertain whether a liability exists. So, example nito is yung mga litigations. So, if let's say nagkaroon ng environmental damages and nagkaroon ng lawsuit. So, the liability of the entity will depend dun sa magiging outcome ng lawsuit na yun, ng litigation na yun. So, it is still uncertain kung magkakaroon ba talaga ng liability. So, in that case, this is called a contingency. Okay. Next is question regarding obligation. Okay. Question. So, ang cue natin dito, there must be a, a present obligation. Medyo kulang yung nakalagay. But it should be present obligation na, not future. Okay. Present obligation. Next is transfer of economic resource. The liability is the obligation that has the potential to require the transfer of an economic resource to another party and not the future economic benefits that the obligation may cause to be transferred. So again, dapat there is a transfer of economic resource to other party and not the future economic benefits that the obligation may cause to be transferred. Okay, so again, we're not counting on future economic benefits because of future obligation. So this is not liability in that case. Kung ang basis ng future economic benefits is the future obligation. So it should be present obligation on which the transfer of present economic benefits is should be transferred or the entity has no other way but to settle it. Okay? Mm, okay, so the obligation potential to cause a transfer of economic benefits need not be certain or even likely. For example, that the transfer may be required only if a specified uncertain future event occurs. So what is the importance? So what important is that walang is to. Mali yung grammar. Okay, so what important is that the obligation already exists and that in at least one circumstance it would require the entity to transfer an economic resource. So ang sabi dito, what is important is that tama nga no, what is important is that anyway. So ang importante daw dito is obligation already exists. Dapat nag-exist na siya. So there should be a present obligation and not a future obligation. Okay? Question regarding transfer of economic resource. Okay, so if wala, punta tayo yes?
Sir, yes po. Pwede na po ba daw mag-share screen si Miss Haral po?
Sige, sure.
Thank you
Let's see.
po.
Halos parehas nga, no? Okay, tama. Parehas nga siya. Pwedeng pa-share yan sa GC natin. Para ako mag-share screen. Okay lang.
Sir, tinatry ko po siyang, yung link po ng Google Drive, tinatry ko pong isend pero masyado daw pong malaki yung file. Kaya hindi po ma-open.
May access ka sa Google Classroom. Doon na lang palagay yung link. Okay lang.
Sige po, sir.
Okay. Okay, sige. FYI mo na lang ako if nandun na, no, para ako na mag-share screen. Okay, thank you. Ito pala eh. Try ko lang, ha. Okay, so download ko na siya. Let me share my screen, ha. Okay, so kita niyo na yung screen ko.
Yes po.
Okay. Hmm, okay. Sa mga may libro, i-check na lang natin kung may discrepancy, ha, yung 2022 and 2019 version. Okay. So, present obligation as a result of assets. Okay, so an obligation to transfer an economic resource. Ito siya. Maybe an obligation to pay cash, deliver goods, or render services. Letter B, exchange assets with another party on unfavorable terms. So, always take note of this, unfavorable terms. Okay, so, okay. Okay. So letter A, pay cash, deliver goods, or render services. Letter B, exchange assets with another party on unfavorable terms. Letter C, transfer assets if a specified uncertain future event occurs. Or issue a financial instrument that obliges the entity to transfer an economic resource. So it doesn't state here na it should be financial liability or non-financial for as long as you have to exchange assets. So general yung term dito. Hindi siya financial assets or non-financial assets. Usually at unfavorable terms because this is a liability. So we will only use favorable terms if you are pertaining to assets or receivables in that case. Okay, so question regarding transfer of economic resources.
Wala po.
Okay, so if none, tuloy tayo sa present obligation as a result of past events. So, ang cue natin dito is, okay, we establish a present obligation. Then, we need to establish also na there is past events. Or this present obligation should be as a result of past events. So, the obligation must be a present obligation that exists as a result of past event. So, a present obligation exists as a result of past event if the entity has already obtained economic benefits or taken action. So, in this case, obtained economic benefits. So, ang tinutukoy dito is in case of sale, natanggap mo na ba yung goods or taken an action in this case for services kung you already render the services. And letter B, as a consequence, the entity will or may have to transfer an economic resource that it would not otherwise have had to transfer. Okay, so as a consequence of obtaining economic benefits or taking action, so the entity will or may have transferred an economic resource that it should not pay kung hindi naman nagkaroon ng sale or services rendered. Okay? So, medyo kulang to. Ang tawag, i-note nyo na lang ano, ang tawag dun sa past events na to is obligating event. Obligating event. Kalang. Paano ba to? To. So, we call it obligating event. Yun yung tawag doon. Obligating event. So, kay Valix, nakalagay yung obligating event na yan. Pero dito, hindi ko siya nakita na na-state. Pero yun yung tawag sa past events that resulting for a company to its present obligation. So, that is obligating event. Okay. So, next is examples. Entity A intends to acquire goods in the future. So, sabi natin, in the future. So, wala yung present obligation. So, present obligation arises only when entity A has already purchased and received the goods. So, in this case, it is already received. So, even you have already purchased it, but you did not receive the goods, then there is no liability. So, sa usual business practice, pag ikaw ay nagkaroon ng purchase order or PO, makaka-receive ka ng delivery receipt, proof na na-deliver na siya, then that is the time na obliged ka na. Required ka ng magbayad. And kapag sinisingil ka na, magbibigay sa'yo si seller ng sales invoice or billing statement, kung ano man yung ginagamit niyang documents para maningil sa'yo, and you have to pay. Kasi binibill ka na niya for the goods received. So, it is not enough na purchase in acquisition of goods. Kasi technically, purchase order pa lang to. And sabi naman dito, has already purchased and received. Hindi naman purchased or received, di ba? And letter B, as a consequence, entity A will have to pay for the purchase price. So there will be a liability kung ito yung example. But ang sabi is in the future, so no liability. Okay, question. Okay, so wala. Tuloy tayo. Entity B operates a nuclear power plant in the current year. In the current year, a new law was enacted penalizing the improper disposal of toxic waste. No similar law existed in prior years. Okay, so parehas naman siya. So the analysis would be the enactment of legislation is not in itself sufficient to result in an entity's present obligation, except when the entity, letter A, has already taken action contrary to the provision of that law. And letter B, as a consequence, the entity will have to pay for a penalty. So, it depends pa rin kung yung batas or if the law has retrospective application. So, meaning anything na against that law prior to the enacting of that law is also covered. But if prospective yung application ng law, then there will be no liability sa company, even though it is already taken action contrary to the provision of that law. But since it is silent, then we can assume niya rito na retrospective yung application. Okay, so accordingly, entity B has no, yes, sabi nga natin, no present obligation if it is existing method of waste disposal did not violate the new law, or hindi sila affected ng new law kasi nga they did not violate naman the provision in the first place. Similarly, entity B has no present obligation if it can avoid penalty by changing its future method of waste disposal. So in this case, ang sabi dito, no present obligation if it can avoid, though it is doing in the past, but they can avoid it in the future to avoid being penalized, then they can do it. So, yun yung sinabi natin kanina dito. It depends kung yung law has a retrospective application or it will only be effective the day it is enacted. So, inassume niya rito na it is a prospective application. So, you will have no problem with that. On the other hand, entity B has a present obligation if its previous waste disposal has already caused damages, and as a consequence, entity B has to pay for those damages. Okay? So, question regarding dito. So, dito naman ang obligating event din. Tama, obligating event din yung highlight dito. So, for entity C, for next example, entity C enters into a revocable commitment with another party to acquire goods in the future. Again, in the future. So, there is no liability. A non-cancelable future commitment gives rise to a present obligation only when it becomes onerous or burdensome. Yun yung term niya dito sa onerous. So for example, if the goods become obsolete before the delivery but entity C cannot cancel the contract without paying a substantial penalty, unless it becomes burdensome, no present obligation normally arises from future commitments. Again, future. So since the obligating event is in the future, then there is no present obligation. Then there is no liability. Okay, next. Although not stated in the sales contract, Entity D had a publicly known policy of providing free repair services for the goods it sells. Entity D has consistently honored this implied policy in the past. So this is what we call constructive obligation. Okay? So in which you create expectation within your stakeholders na i-honor mo yung liability mo or i-honor mo yung policy mo na yun. So entity D has, yes, as a present constructive obligation to provide pre-repair services for the goods it has already sold because the entity D has already taken an action creating a valid expectation on the customer that it will provide pre-repair services, and letter B, as a consequence, and the entity D will have to provide those free services. So okay ba tayo? May question ba regarding dito sa constructive obligation?
Wala po, sir.
Okay, so kung wala, again, it does not need to be stated in the sales contract. Kasi if it is included in the sales contract, then it is not constructive obligation. It is a legal obligation. Okay. Letter E. Entity E obtained a loan from a bank. Repayment of the loan is due in 10 years' time. Then letter E has a present obligation because it has already received the loan proceeds and as a consequence has to make the repayment even though the bank cannot enforce the repayment until a future date. So this is an example of a non-current liability. Though the obligation is due to be settled at a later date, especially a more than 12 months, but still the obligation exists. There is a present obligation kasi may magmamature dyan every month, every year. It depends on contract. There is an obligating event. Ang obligating event dito is yung the entity has already received the loan proceeds and there is an avoidable transfer of economic resource in unfavorable terms, which is yun yung payment ng loan. So there is definitely a liability dito. Okay, wala bang question? Just raise your hand kung may question, ha. Entity F has caused environmental damages. Although no law existing penalizing such act, Entity F believes it has an obligation to rectify the damages. However, the entity of the party to whom the obligation is owed cannot be specifically identified. As mentioned earlier, hindi mahalaga na unknown yung isang party sa isang liability. What important is there is a present obligation, the transfer of economic resource is inevitable, and again, there is an obligating event, on which the obligating event here is yung entity F has already caused environmental damages. So in that case, entity F has a present obligation because it has already caused the damages, and as a consequence has to rectify the damages, even if the identity of the party to whom the obligation owed is not specifically known. Okay? Please, question. If none, tuloy tayo. Entity G employed Mr. 1. So, in this case, Mr. 1, ito lang yung given, di ba? Employed lang. So, tuloy natin. Analysis, Entity G has no present obligation until after Mr. 1 has rendered services. Before then, the contract is executory. Okay, executory. Entity G has a combined right and obligation to exchange future salary for Mr. One's future services. So, executory means both party, ito pala, nakalagay pala, both party has neither or partially, has neither fulfilled or partially fulfilled their obligation to an equal extent. So, meaning, since Mr. One, oh, sorry, since entity G, again, Mr. One has not yet rendered services. Sorry. Okay, so entity G has no present obligation since Mr. One has yet to render his services, so that entity G also has no obligation to pay Mr. One. So that means executory. It is either wala pang nakakapag-fulfill sa contract, or both party partially filled their obligations sa contract. So meaning, no liability exists yet. Okay, so ganun si executory. Unlike, let's say, August 1, na-hire ni Entity G si Mr. 1. Then si Mr. 1 is nagtrabaho until August 15. So in that case, Mr. 1 already fulfilled the part of his obligation. So Entity G has a liability to Mr. 1 to pay his salary from August 1 to August 15. So that is the time Entity G will have a liability. But not no liability is recognized until unless or the contract is still executory unless one party already fulfill their obligation under the contract. Okay, so okay. So an executory contract establishes a combined right and obligation to exchange economic resources which are interdependent and inseparable. Okay, okay, so tama naman. The entity has an asset in terms the contract are favorable and a liability if the terms are unfavorable. So in this case, unfavorable siya kay entity G kasi magbabayad siya. So it is a liability, a financial liability for entity G and a financial asset for Mr. 1 since the terms of contract would be favorable for him since he already rendered the services. Okay? The contract ceases to be executory when one party performs its obligation. Okay, as we mentioned earlier, The contract ceases to be executory when one party already performed yung obligation niya. So in that case, Mr. 1 already worked from August 1 to August 15, then the contract is not executory. Liability already exists. Okay? If the entity performs the first, the entity's combined right and obligation exchanges to an asset. So in this case, asset to ni Mr. 1, and the other party performs first, and the entity's combined right and obligation changes to liability. Okay. Continuing the previous example, entity G neither recognized an asset nor a liability upon entering the employment contract with Mr. 1 because at that point, the contract is executory. So wala pang liability and wala pang asset for both parties. Executory pa lang. Unless may signing bonus si Mr. 1, di ba? So in case of signing bonus, pag-sign pa lang niya, liable na si entity G, then the contract is not executory until the time na mabayaran na yung signing bonus. Next is, if Mr. 1 renders services, the contract ceases to be executory, then entity G's combined right and obligation changes to liability. Okay, already discussed. In this case, salary is payable, so it is a financial liability since it is payable in cash. Okay, assets. Okay. So question regarding this example. Okay. Nan, tuloy tayo. Recognition criteria. So an item is recognized if, letter A, it meets the definition of a liability. So ano ba yung liability? Yung tatlong nasabi natin kanina. There should be a present obligation. There should be an transfer of economic benefits with unfavorable terms. And lastly is yung obligating event. It should be a result of a past event. And letter B, recognizing it would provide useful information, relevant and faithfully represented information. So, itong letter B, usually, ano naman siya, inherent na siya sa letter A. So, meaning, kapag na-identify mo na yung tatlo na to, usually, it is a useful information. So, oh yes, maybe. But I don't see this useful anymore. Parang redundant na siya kay letter A. Okay? Okay, so both criteria above must be met before an item is recognized. Accordingly, items that meet the definition of a liability but do not provide useful information are not recognized and vice versa. However, if a liability is not recognized, information about it may still be disclosed in the notes. So disclosure lang daw if the liability does not provide useful information. But for as long as it is a financial liability, I don't think it is not recognized. For as long as it is financial, whether it is useful or not, kailangan mo siyang ilagay. Financial statement as a separate line item. However, if a liability is not recognized, information about it may still be disclosed in the notes. Yes, tama yan. There should be a disclosure, especially for contingent and remote liabilities, in which we will tackle later this chapter. In such cases, the item is referred to as unrecognized liability. So, unrecognized liability is, okay, sulat ko na lang add text. So, ang unrecognized liability na tinutukoy niya dito is contingent liability and remote. No, hindi siya liability. Contingent liability. Anyway, remote liability. Okay. So, yan yung tinutukoy niya dyan na unrecognized liability that only requires disclosure. Okay? Yun yun. And the other two na kailangan nating i-recognize is ano ba yan? Hindi ko na nilagay ulit. Okay. So, ang kailangan nating i-recognize, recognition is required is, of course, liability, in which na-meet niya yung three criteria. Liability. Tama ba spelling ko? Hindi ko makita. Liability. And the other one is vision. Okay, so madidiscuss natin yan later this chapter. Kung wala sa chapter na to, maybe in the next one. But for notes, for uh, references, ilagay nyo na rin. Okay, so relevance. Recognition may not provide relevant information if, for example, it is uncertain whether a liability exists, which is a contingent liability, or letter B, a liability exists, but the probability of an outflow of economic benefit is low, which is the remote liability. So, ito yung dalawang yun. Ito pala yun. So, it is uncertain whether a liability exists. So, ito yung contingent liability. And letter B, a liability exists, but the probability of an outflow of economic benefit is low, which is called also remote liability. Ito yung dalawang yun. Okay, so existence, uncertainty, or low probability of an outflow of economic benefits may result in liability but does not automatically lead to the recognition of a liability. Other factors should be considered. So whenever we say recognition, ano ba ibig sabihin ng recognition? Okay, so that is our first question para sa ating ano bang tawag doon? Nakalimutan ko na. Recitation. Okay, anyone? Anong ibig sabihin ng recognition? So whenever we say we will recognize liability, what does it mean? What does it imply? Ano ibig sabihin nun? Anyone? Or kailangan ko pang tumawag? Okay, so walang sumasagot. Tataas ng
Sir, ako
kamay.
po, try ko po.
Raise your hand na lang, para makilala
Sir,
ko.
wala po kasing raise hand button po, sir.
Wala ba't wala? Wala ba?
Opo, sir, wala po yata.
Ba't kaya wala? Ba't meron to di ba? Off ba sa akin? Tinanggal na po ni Sisi. Sisi? Sino si Sisi? Sinanggal na po, sir. Okay. Wala na siya sa Google Meet. I think mas magandang gamitin ng Teams na yun. Bagay, tsaka na natin pag-usapan yan later this day. Okay, so ayun na lang. Open mic na lang kayo kung gusto nyo. Yes, Miss De Leon.
Sir, sige pa. Sir, for me po, pagkaintindi ko po kasi sa recognition, yung pag nire-recognize mo ang isang liability or any accounts po sa mga transactions po, ibig sabihin po nito, naaapektuhan niya po yung pinaka whole transactions or also yung mga financial records po natin. Kaya po natin sila nire-recognize. Yun po.
Okay. So, affected yung financial records. So, medyo malapit na siya. But I can consider na. Okay, anyone?
Ako rin po, sir.
Yes, Miss Althea. Tama ba?
I think po, if mag-recognize po ng asset, liability, or any account, it means po na nire-record niyo siya dun sa particular account na yun. Kaya po, affected din yung accounts kasi pag na-recognize nyo, ibig sabihin may possible addition or may effect po dun sa account na yun. So, pag nagre-recognize po, nagre-record din.
Okay. So, much closer. Mas malapit yung sagot na yun. So, recognition on a part of accountants, sa mga nagpe-prepare ng financial statements, it is the recording of transaction. So, meaning, if you say it is recognized, it should be recorded. Diba? But on the part of the users or the end users, it should be presented. So, yun yung key term na kailangan nating tandaan. If an item should be recognized, therefore, it should be presented on the financial statement. But on accountant side, it should be recorded, which is correct. Almost same with Miss De Leon's answer na it should affect the financial statement. O how can you affect financial statement kung hindi mo i-record, di ba? So, that is correct. But the main definition of recognition in financial statement is presentation. It should be presented. Okay. But again, on the perspective of the one who prepared the financial statement, it should be recorded. So I will consider that correct. Okay, so again, recognition. Saan na ba ako? Recognition. Wala. Ito. So recognition means, lalagay natin, presented. Okay, in okay. Yun yung ibig sabihin ng recognize. Should be presented in the financial statement. Okay, so question. Any question regarding sa recognition criteria natin? Okay. If wala, then it is already 12. You may take your lunch. So we will proceed on 12:30. Okay. 12:30? Okay na ba yun? 30 minutes? So 20 minutes na lang. Ayaw niyo pa ba mag-lunch? Pwede naman nating tuloy ito. 30. Okay. Sige. So, ganun lang. Balik tayo ng 12:30. Take your lunch. And okay, so let's continue na. So, next is, dito na tayo, di ba? Faithful representation. Okay, so, faithful representation. So, a liability must be measured for it to be recognized. Often, measurement requires estimation and thus subject to measurement uncertainty. The use of reasonable estimates is an essential part of financial reporting and does not necessarily undermine the usefulness of the information. Even a high level of measurement uncertainty does not necessarily preclude an estimate from providing useful information if the estimate is clearly and accurately described and explained. However, an exceptionally high measurement uncertainty can affect the faithful representation of liability. So, faithful representation ay actually ang meaning ng faithful representation is it should be presented free of error and hindi free of error, free of fraud. So that is the meaning of faithful representation in the oldest standards. It should be free of fraud, errors, and omissions, mistakes. So yun yung meaning niya. Medyo siguro description lang ito sa faithful representation. But yung tinutukoy niya rito na estimation is more on I forgot. Pero anyway, so yun lang. A faithful representation is it means that the presentation of the asset or FS line item should be free of error, mistakes, and omissions. Okay, so next, financial and non-financial liabilities. So ito na, financial liability is any liability that is uh, a contractual obligation to deliver cash or another financial asset to another entity. And letter B, a contractual obligation to exchange financial assets or financial liabilities with another entity under conditions that are potentially unfavorable to the entity. Or a contract that will or may be settled in entity's own instruments and not classified as the entity's own equity instrument. So letter A. Letter A muna tayo. So a contractual obligation to deliver cash or another financial asset to another entity. So meaning cash, pera, hard cash. Dapat daw for a liability to be considered as financial, the obligation must be to pay in cash or another financial asset. So anything that is paid through cash or any financial consideration is considered to be financial liability. So what if ang ibabayad mo is, yung like sa example natin kanina kay Mr. One and Entity G. So in this case, uh, nagbigay na ng cash si Entity G. Nagbayad na siya. So is it a financial asset on the part of Entity G? And is it a financial liability on the part of Mr. One? The answer is no. Entity G cannot consider the advance payment of salary to Mr. One as a financial asset kasi Entity G is not expecting anything financial from Mr. One, di ba? Ang ina-expect niya na gawin ni Mr. One is to work, to render services for the company. Same with Mr. One. Ang ina-expect naman niya na gawin in return dun sa advance payment ng salary ni Entity G is to render his service to the company and not to pay it in cash. So, that is a example of a non-financial asset and that is also a non-financial liability. But yes, it is a liability, but it is not a financial one. Okay, so that is the meaning of letter A. Sorry. It should be the, pay, the obligation should be to pay in cash or under another financial asset. Letter B, a contractual obligation to exchange financial assets or financial liabilities with another entity under conditions that are potentially unfavorable. So, the exchange of financial assets and liabilities with another entity in an unfavorable uh, terms. So, alam natin yan, kung magbabayad ka ng financial asset or financial liability sa another entity under unfavorable terms, then it is a financial transaction. And letter C, a contract that will or may be settled in the entity's own equity instrument and is not classified as the entity's own equity instrument. So this is financial in nature kasi you are issuing your equity instrument and is not classified as the entity's own equity instrument. Okay. So next is non-financial liability is a liability other than financial liability. So anything na hindi that will not be settled in cash or in financial liability is considered to be a non-financial liability. So yun lang yung difference nila. There should be a cash involved in another financial liabilities for it to be considered a financial liability. Okay, example of financial liabilities. Letter A, payables, such as notes, loans, bonds, and accrued payables. So all of these are payable in cash. Kaya siya financial liabilities. Lease liabilities, payment in cash din ang expected dito. Held for trading, so for appreciation, meaning for value. So you are referring to cash. Letter D, redeemable preference share issued. So ito yung example nung letter C natin. So entities own equity instrument, preference share, di ba? Equity instrument yan ng company, but is not classified as entities own equity instrument. Bakit? Kasi redeemable preference share issued is considered to be a financial liability despite equity instrument siya ng company. Why? Mamaya, i-explain natin yan kung bakit. Okay, so anyway, mamaya na lang. Letter E, security deposits and other returnable deposits. So ito naman, you are expecting to pay to the suppliers, customers, suppliers mo na ibabalik, no, customer yata to. Yes, customer. Na ibabalik nila sa'yo yung containers mo, then ibabalik mo sa kanila yung security deposit nila. So the settlement is in cash, so therefore it is a financial liability for returnable deposits. Okay? So itong, discuss na nga natin, itong redeemable preference share, hindi siya equity, but siya ay financial liability kasi yung redeemable preference share issued is usually nakadepende sa holder ng redeemable share kung kailan niya i-redeem yung kanyang equity, yung kanyang pera, kung kailan niya i-withdraw yung invest niya. So, the timing kung kailan magiging liability yung equity instrument na to is not on the entity's discretion. Nasa holder. So, that's why it is considered to be financial liability kasi once the holder withdraw or ginusto na niya na kunin yung pera niya, it is due demandable. Kailangan mo na siyang ibalik agad. So that's why it is considered a liability rather than an equity. So yun yung difference naman niya kay callable. Si callable naman, ang discretion na i-call yung mga preference share is nasa entity. That's why it is an equity instrument and not a financial liability. Okay, so the following are not financial liabilities: unearned revenues, warranty obligations that are to be settled through future delivery of goods or provision of services. So again, these obligations are not expected to be settled in cash, but through future delivery of goods and provision of services. So that's why hindi siya financial liabilities. Letter B, taxes, SSS, PhilHealth, and pag-ibig payables, hindi rin siya financial liabilities kasi these are due to governments. Hindi mo siya pwedeng ibayad sa ibang entity. Like financial liabilities are capable of. So this is not a financial liability. And letter C, constructive obligations. Hindi siya financial liability. They do not arise from contracts. Okay? Financial liability only arises from contracts. So letter B is arising from contracts and laws enacted para sa mga to. And letter C, alam naman natin na hindi siya na constructive obligation does not need contracts for it to be enforced. So, a valid expectation is enough para ma-consider mo siya as liability under constructive obligations. That's why it is not a financial liability. While commodity contracts cannot be settled net in cash or other financial instrument, but only through commodity exchange. So, gaya nito, coffee beans, cold bouillon, or anything are not financial services. So in this case, sa letter A, ang commodity contracts natin dito is services. So that's why it is not. Actually, hindi siya commodity. Service contracts siya. Commodity contracts is, ito yung mga example niya. Like valuable commodities. Ito is service contracts. So it is not a financial liability. Okay, question in this page. Okay, if not, then let us continue. Presentation of financial instruments. So, ito na yung sinasabi natin kanina. It should be presented. If we want to recognize an item, then it should be presented in the financial statements. Okay, so the presentation of financial instrument. The issuer classifies as financial instrument or its component parts as a financial asset, liability, or an equity instrument in accordance with the substance of the contract rather than its legal form. So, ito yung tinatawag natin na substance over form. I don't know kung meron pa ngayon. And the definition of financial asset and financial liability and an equity instrument. So, equity instrument is any contract that evidences a residual interest in the assets of an entity after deducting all of its liabilities. So, this definition reflects the basic accounting equation. Ito, naman natin to. So, when determining whether financial instrument is a financial liability or equity instrument, the overriding consideration is whether the instrument meets the definition of a financial liability. So, for a financial liability to be recognized as a liability, the entity should have a contractual obligation to pay on cash or another financial asset or to exchange financial instruments under potentially unfavorable condition. While for equity instrument, the entity has no obligation to pay cash or other financial asset under potentially unfavorable condition. So a contract is not an equity instrument merely because it is to be settled in entity's own equity instruments. So again, kapag nag-issue ka in a transaction, if you pay it using your equity instrument, so you meaning you are only extending your equity and you are not paying financial asset, which is equity is not a financial asset of a company. Hindi financial asset ng company yung kanyang equity. So that is a separate classification on financial asset, financial liability, and equity instrument. Okay. Question. Okay, so if wala, then let us continue. So, financial liability. So, tandaan nyo lang rito, whenever it is variable as to number or amount, it is financial liability. That is the Q. Okay? If the number of entities own equity instrument in exchange for a fixed amount of cash or another financial asset, in exchange for a variable amount of cash or other financial asset. So, it is a financial liability. Okay? Unlike for equity instrument, if the contract requires the delivery of a fixed number amount of entities own equity instrument in exchange for a fixed amount of cash or another financial asset, then it is an equity instrument. It is a purchase. Or no, this is not a purchase. This is a subscription of the company's equity. Para ka lang bumili ng shares of stocks. Ganun yun. Unlike financial liability na nag-derive siya ng value based doon sa value ng commodity. Makikita nyo dito. A contract to deliver as many as are equal to the value of a fixed amount of cash, say like 100,000, or a fixed amount of units of commodity, say 50 grams of gold. So nag-base yung value nung equity dun sa market value nung commodity. So it is not an issuance of equity instrument, but that is considered to be a financial liability. Okay. So, ito yung summary niya. So, variable number for fixed amount or fixed number but variable amount, it is a financial asset or a financial liability. Unlike equity instrument, both are fixed, then it is considered to be equity instrument. Question. Okay. So, siguro nagtatanong kayo, bakit sir? Anong kinalaman nung pagiging variable niya? Kasi nagbe-base tayo sa changes ng market value nitong mga commodity na to. Unlike dito, ang consideration lang na meron tayo is yung par value or yung par value plus paid in capital ng equity instrument na to. So everything is fixed, then it is considered as an issuance of equity instrument. Yun lang yun. Unlike dito, nagbe-base siya sa fluctuations ng market value ng mga commodity na to, let's say gold or any valuable commodity, then it is considered to be financial transaction. So there should be a financial asset and a financial liability. Okay. So tuloy tayo. So ito na yung sinasabi natin kanina. Redeemable preference share. So preferred stocks which the holder has the right to redeem at a set date. So the holder has the right. Okay? So it is redeemable anytime actually. Kung kailan magustuhan ng holder na i-redeem, then pwede niyang i-redeem yun. So it is classified as financial liability because when the holder exercises its right to redeem, the issuer is mandatorily obliged to pay for the redemption price. So yun yung tinutukoy dito. A contract that will or may be settled in the entity's own equity instrument and is not classified as the entity's own equity instrument. Financial liability yun. So, ang in-issue dito is preference share. So, ano ba yung preference share? Di ba part siya ng equity? But it is considered to be a financial liability kasi nga, because of the qualities na meron si redeemable preference share. So, hindi siya nagko-qualify as equity since yung right to redeem is on the holder and not on the issuer like callable preference share. Okay? So, question. Okay, if wala, then let's try. May illustration dito. So, let's try na sagot. Okay. Okay. So, isa-isahin natin to. Muna natin pakita yung solution. Okay. So, anyone? Accounts payable. Part ba to ng financial liabilities?
Yes po.
Yes po.
Yes po.
Yes po.
Yes, part siya ng accounts payable. Sorry. Part siya ng financial liabilities. Since it is an accounts payable, which is payable in cash. So, tatawag na lang pala ako para maganda. No? Okay. So, Miss Cordero, utilities payable, is it financial liability or not?
Financial liability po.
Why? Bakit? Hello, Miss Cordero. Bakit siya financial liability? How can you say? Mhm. So, simply because payable siya in cash. So, I think wala namang utilities ngayon na pumapayag na bayaran sila in properties. Wala namang ganun, di ba? So, simply because it is payable in cash. So, next is accrued interest payable. Miss De La Cruz, Rizel. Are you here?
Ano po,
Accrued interest payable, is it financial liability or not?
financial liability,
Why?
ano po siya? Dahil po liabilities, hindi po siya cash.
Sorry, medyo malabo yung dating. Sorry.
Liabilities po siya, hindi po siya
Oh yes, liability siya. But is it a financial liability or not?
financial liabilities,
Bakit?
hindi po siya cash.
Yes, payable siya in cash. So that's why financial liability siya. Okay, so next is advances from customers. So is it a financial liability or not, Miss Giumano? Miss Diomano? Tama ba yung... Yes, yes.
Ano, wait lang. Ano po?
Advances,
Opo.
advances from customers.
Opo.
Financial liability siya or hindi?
Financial liability po.
Bakit?
Yes, hindi daw po. Char lang sir. Hindi daw po.
Char lang.
Kasi
O sige, bakit hindi siya... Bakit hindi
po
siya...
kung, ano po, service na po or yung parang goods na po yung i-render or yung ibibigay niyo sa customer.
Yeah, tama yun.
Tama po.
Yes. So, advances from customers kasi, technically, ano yan, advance payment ng mga customers mo. So, since nagbayad na sila, ang liability mo is not naibalik yung overpayment nila. Ang kailangan mong gawin is ibigay yung goods or services na they paid for. So, it is not a financial liability since you cannot extinguish this liability by paying in cash or other financial asset but to perform service or deliver goods. So, hindi siya financial liability. Okay, next is Mr. Estrella. So, unearned rent, financial liability or not? Yes, Mr. Estrella. Unearned rent. Okay, so i-chat mo na lang yung sagot mo. Why? Ano ba talaga? Hindi pa po kasi na-earn yung rent expense. So, the answer is no. Hindi financial liability si unearned rent. Bakit? Kasi since nagbayad sila in advance for a while Yan. So, nagbayad in advance yung tenant mo. So, yun yung transaction dyan. Kasi nagkaroon ka ng cash na ibinayad sa'yo in advance. That's why you have unearned rent. So, mai-fulfill mo lang yung obligation mo in that contract by letting them uh, to lease yung property or to occupy the yung property na yun. Okay? That's why hindi siya financial liability. Hindi mo naman i-discharge yung liability through payment of cash or other financial liability. Madi-discharge ka lang dun sa liability mo by letting them to occupy yung property. Ganon. Yes. Ano yung
Sir,
question?
bali po dun sa sinabi niyo, hindi po siya treated na financial, pero treated po siya as a liability. Ano po?
Yes.
Okay po.
Yes. So we are specific dito kasi sa exam sa problem na to to financial liabilities. But yes, tama ka. Unearned rent is liability but it is not financial in to be specific, hindi siya financial. But ang kailangan kasi natin is financial liabilities. Okay? So, next. Warranty obligations. Miss Garovillas.
Ano po, sir, not financial liability po.
Mm-hmm.
Kasi,
Bakit?
ano po, sir, ano, contingent liability po kasi siya, which may arise po or not, depending on the event po.
Okay. So, tama ka na hindi siya financial liability. But, yes, probably, contingent liability siya. But, later on this chapter, I think meron ditong warranty expense. Meron ba? Parang wala. But I don't think contingent liability siya. Kasi meron tayong estimates na ginagawa dito based on historical data. So, to be specific, provision siya. So, still a liability worth of recognition, but not a financial liability. Okay? So, next is, oh yes, Miss Rainy.
Ako po ba, sir?
Yes.
So, ayun po, yung income tax payable po, ano po siya, hindi po siya financial liability kasi ang taxes po ay hindi po siya contractual.
Oh, yes, tama yun. Hindi siya based on contract, but based siya sa legislation, sa batas. So, that's why it is a legal obligation. And legal obligations are not financial liabilities, okay? So, hindi siya financial liability. Next is preference share issued. So, ako na lang bibilisan na natin. So, preference share issued, hindi niya isinama as financial obligation dito yung preference share issued. Kasi, hindi naman nakalagay if redeemable ba siya. So, if simple issuance ng preference share, then that is considered to be an equity instrument. Issuance of equity instrument. Okay? So, unless stated na redeemable siya, then we can consider na financial liability siya, but it is not. So, stick tayo sa hindi siya kasama. Next is constructive obligation. Hindi siya financial obligation kasi nga, hindi siya financial liability kasi nga constructive obligation siya. Obligation to deliver a variable number of own shares worth a fixed amount of cash. So, may variable. So, matik na yan. Financial liability yan. Next is SSS contribution. Again, hindi siya contractual based on legislation. Next is cash dividend. Kasama yan kasi these dividends are payable in cash. Property dividends, hindi ulit kasama kasi payable siya in form of property. Share dividend, hindi rin siya kasama kasi this is technically just transfer of equity within equity. Okay? Next is lease liability, kasama siya because leases are generally paid in cash. Bonds payable, kasama rin yan together with its discount. So, lagi magkasama yan ha. Itong dalawang to. Lagi sila magkasama. Si bonds and discount on bonds payable. Next is security deposit. Yes, madi-discharge ka lang if you refund yung security deposit provided na walang rectification works or anything na deductible sa security deposit na to. Okay, next is redeemable preference share issued. So ito, matik to. Financial liability yan. And unearned interest on receivables. Bakit hindi kasama to? Anyone? Bakit hindi siya kasama sa financial liabilities? Di ba ang interest is payable in cash? So why is that itong interest na to is hindi kasama? Kasi unearned siya? Yes. And kasi receivable siya. So in this case, financial asset to. But kahit ang itanong pa natin is financial asset, hindi pa rin siya magiging financial asset sa ngayon kasi unearned pa siya. Okay, so it should be interest on receivables and you can consider it to be financial asset. Okay? But since unearned nga siya, liability siya, but the problem is receivables yung topic natin, yung binigay niya. Okay. So let's continue. Recognition of financial liabilities. So financial liability is recognized only when the entity becomes a party to the contractual provisions of the instrument. So there are many ways to classify financial liabilities, but all financial liabilities are classified as subsequently measured at amortized cost. Okay? Except for the following. I think ibig sabihin niya rito is all financial liabilities are classified as initially measured at amortized cost. Kasi subsequent measurement na yung sinasabi niya, wala pa tayong initial measurement. Ba't ganun? Anyway, ulit tayo. So, financial liabilities can be measured at fair value through profit or loss, and derivative liabilities subsequently measured at fair value. So, ang example nito is yung designed for and held for trading. Letter B, financial liabilities that arise when a transfer of financial asset does not qualify for the recognition, subsequently measured on a basis that reflects the right and obligation that the entity has retained. And letter C, financial guarantee contracts and commitments to provide a loan at a below market interest rate, subsequently measured at a higher of the amount of loss allowance, the 12-month expected credit losses, and the amount initially recognized when the appropriate cumulative amount of income recognized in accordance with the principles of PFRS 15. So letter B, these are the assets na or liabilities na kahit mag-transfer ka ng financial asset will not still qualify for the recognition of the financial liabilities. So may mga ganong klase ng liabilities. And letter C, ang tinutukoy niya dito is yung credit losses at risk. We call it credit risk. Ano ko na yung tawag, but something connected sa credit risk. This is recognize siya sa other comprehensive income. Okay, so I'm not sure kung meron pa tong example later, but credit risk through, anyway. So, just ilagay na lang natin yung credit risk. Kalimutan ko yung tawag. Tignan natin yan. So, other comprehensive income. Okay. So, letter A, ito yung alam natin na financial liabilities at of fair value through profit or loss. So, ang pinaka-purpose ng entity, bakit niya na-measure yung financial liabilities at fair value through profit or loss is through trading, held for trading. So, if you are holding a financial liabilities and you are intending to sell it on a future time or on a short-term basis, so you have to measure it through fair value through profit or loss. Okay, so any changes in the market value will be close to profit or loss, as mentioned dito sa profit or loss. Okay. However, this one, this below market interest rate, nire-recognize natin yung changes niyan sa other comprehensive income rather than sa profit or loss. Okay, so I believe later sa chapter na to may encounter natin to. And letter D, a contingent consideration required by an acquirer in a business combination subsequently measured at fair value through profit or loss. So reclassification of financial liabilities after the initial recognition is prohibited. So I suspect talaga na initial recognition to. Kasi ang tinukoy niya rito is initial recognition, hindi subsequent. Okay? So I think initial recognition yung gusto niya sabihin dito. Okay. So question dito, question. Okay, so kung wala, tuloy tayo. Measurement of financial liabilities. So at initial measurement, financial liabilities are initially measured at fair value minus transaction cost, except financial liabilities at fair value. Okay, except financial liabilities at fair value whose transaction costs are expensed immediately. So, ano ba yung tinutukoy na fair value sa initial measurement? So, yung fair value sa initial measurement, ito rin yung acquisition cost. Okay, malilito ha. Okay. Ito rin yung purchase price or acquisition. Okay. So, that is true. It is true that fair value is equal to purchase price or acquisition cost at initial measurement. Kasi at the time na i-acquire mo yung financial liability, fair value is equal dun sa acquisition cost. Unless mabibili mo siya at a lower price in which magkakaroon ka naman nito. Credit risk through OCI ang recognition naman yung below market interest rate na acquisition ng financial liabilities. Okay? Okay. So, next is subsequent measurement. So, this is the initial measurement. Fair value minus transaction cost. So, these transaction costs are normally nagiging part ng acquisition cost except for financial liabilities at fair value through profit or loss whose transaction costs are expensed immediately. So, tandaan nyo at initial measurement, kapag ka designate mo siya at fair value through profit or loss, transaction costs are expensed immediately in the profit or loss. Unlike financial liability measured at fair value less transaction cost, which is designated at amortized cost, which is ito yun. transaction cost is included dun sa fair value natin, which is equal dun sa purchase price and acquisition cost. Okay, so subsequent measurement. Financial liabilities classified as amortized costs are subsequently measured at amortized cost. So, sa initial measurement, we have amortized cost and we have fair value through profit or loss. Initial measurement. Okay? So, ang tinutukoy ko na amortized cost dito is ito. Yung fair value, minus transaction cost. Yun yung amortized cost. Yung tinutukoy ko naman dito na fair value through profit or loss is yung exception. Okay? So, for subsequent measurement, we have 3. So, number 1 is amortized cost. So, meaning, okay. Okay. So, ang tinutukoy natin na amortized cost do sa subsequent measurement is ito. So, kukumpitan natin siya ng present value and kukumpitan din natin siya ng present value of future payments for us to arrive dun sa kanyang present value. Okay, kailangan natin siya kumpitan ng present value niya using annuities. Number 2 is financial liabilities classified as held for trading. So, which is measured at fair value through profit or loss. Okay. And number 3, or the third one, is financial liabilities designated at fair value through profit or loss that are subsequently measured at fair value with changes in fair values recognized. Ito na yun. In letter A, amount of change in fair value of the financial liability that is attributable to the changes in credit risk of the liability is presented in other comprehensive income. Ito na yun. Tinutukoy ko na to. So, subsequent measurement siya. Okay? In which the changes in fair values is reported in other comprehensive income and not in profit or loss. Gaya ni held for trading. Okay? And letter B, the remaining amount of change in the fair value of the liability is presented in profit or loss. So, sa example na to, sa third one, sa third bullet, let's say, okay, total credit loss, ang total changes in fair value is, let's say, 100,000. Okay. So, ang sabi sa problem, these losses attributable to change in credit risk is, let's say, 30,000. So, this 30,000 will be reported in other comprehensive income, while the remaining will be reported is 70,000 in P&L. Okay, so sino dito yung makakapag-identify o makakapag-define sa akin ng difference between other comprehensive income and profit or loss? Familiar na ba kayo sa dalawang to? Anyone? Okay. So, ganito siya nag-work. So, dito, example, meron tayong statement of comprehensive income. So, for short, SCI. Okay? This is the statement of comprehensive income. So, ito yung bagong tawag sa income statement dati. Dati di ba yan lang ang tawag? Income statement. Pero ngayon, ang tawag na sa kanya is, kumpletuhin na natin, statement of, sorry. Of, ano ba yan? Sorry Of comprehensive income. So, yan yung income statement natin. So, under statement of comprehensive income, you will have your revenue, you will have your cost of sale, then sa ilalim niya, kakaroon ka ng ano tawag doon? Nakalimutan ko lang. Revenue less cost of sale is gross profit. Tama ba? Yes, gross profit, GP. Then you will have your operating expense, OPEX. You will have your other expenses, and you will have your net income. Net operating income. So, under net operating income, or which is yung tawagin natin is, or net income na lang. Kasi yung net operating income is after ng OPEX, but sinama na natin yung other expenses, so net income na. Under net income, ito yung kung tawagin is P&L. Okay. So, P&L comprises itong mga to. Yan, yung mga yan. Yung mga green. Ay, naging green lahat. Ano ba yan? Pulo na lang natin. Pala yung ganun. And then, i-add natin si other comprehensive income or si OCI. Then, ang tawag na sa income natin is comprehensive income. So, meaning, kapag ang tinanong ko is P&L, so what is the profit or loss for the period? Simply speaking, disregarded yung mga items under other comprehensive income. Okay? Pero pag ang tinanong ko is comprehensive income for the period, then automatically kasama na yung other comprehensive income. Okay? Naintindihan ba? Ulit ha. So, we have revenues, we have cost of sale, then pag dineduct natin yan, gross profit, then we will deduct yung operating expenses and other expenses na related sa business, then we will have our net income or the profit or loss. But if ito yung traditional na net income hanggang dito lang yung traditional net income, income statement. But in the advent of the new one, yung statement of comprehensive income, so technically, P&L plus OCI is equal to comprehensive income, which is ito na ngayon yung required by the standard. Okay? So again, kapag ang tinanong ko is P&L, so hanggang dito ka lang. Hindi mo isasama si OCI. Pero pag ang tinanong ko is comprehensive income, then kasama si OCI. As in lahat, everything. So in that case, kapag ang tinanong natin is P&L, hindi kasama yung changes in credit risk kasi reported siya under OCI. However, kapag ang tinanong ko naman is comprehensive income, then kasama siya lahat. Lahat ng income. Okay? Malinaw ba? Talaga ba? Malinaw? Sige. Sabi niyo yan tuloy tayo. Let's continue. Kulang pa lang 3 years dito. Haba kasi. Yung kay Valix, tapos na natin yung 2 chapter. Anyway, tuloy na natin. Measurement of non-financial liabilities. So, non-financial liabilities are initially measured at the best estimate. So, sabi ko nga kanina, doon sa sagot ni, sino ba yung sumagot nung contingent liability? Sino ba yun? Sorry. Kalimutan ko. Basta may sumagot kanina na, sino ba yun? Ayun, si Miss Carovillas. Sabi ni Miss Carovillas na contingent liability daw ang tawag kapag yung liability will be only recognized at a future event. And hindi siya ganun. Kasi, for a while Okay? So, hindi siya ganun. So, we will have our best estimate kung paano natin mako-compute yung liability. So, ano ba yung mga non-financial liabilities that we recognize as provision? So, ito yung mga yun. Obligation arising from statutory requirement. So, ito yung SSS, PhilHealth, Pag-ibig, income tax, or anything that we pay sa government. So, non-financial liability, but we do the best estimate. So, we have the income tax payable for the current ones, deferred tax liabilities and asset for the non-current ones. We have SSS, PhilHealth, Pag-ibig, warranty obligations. So, dito kasi, sa warranty obligations na to, though, the act of claiming yung warranty is not yet there. But again, we create a constructive obligation dun sa mga customer na 2 years warranty yan, 1 year warranty yan. So, we have to measure yung best estimate na liability na pwede natin recognize. Okay? So, same with unearned and deferred revenues. So, usually contractual itong mga to. But, yes, tama. Contractual yung mga yan. That's why non-financial liabilities sila. And letter D, commodity contracts that either cannot be settled in cash or which are expected to be settled by commodity exchange. So, yung gaya kanina, yung sa gold, so non-financial liability yun. Okay, so best estimate. Questions? Sorry. Baka may tanong kayo. Feel free lang na i-chat or mag-open mic. Okay, so if wala, tuloy tayo. FS presentation. So liabilities are presented as either current or non-current on the face of a classified statement of financial position. So a classified statement of financial position is one that shows current and non-current distinctions. So when an entity presents an unclassified statement of financial position where it's based on liquidity, disclosures of liability due within 1 year and due beyond 1 year should nevertheless be made in the notes. So we are not preparing this one. Okay? Hindi natin ginagawa yung unclassified. So we are only preparing a classified one. Okay. Current liabilities. So current liabilities are liabilities that are expected to be settled in the entity's normal operating cycle. So let's say ang normal operating cycle niya is 15 years. No, sobra naman yun. 15 months. Let's say 15 months. So is it still considered to be current even though it is more than 12 months? The answer is yes. Kasi yun yung normal operating cycle ng business. It takes 15 months for an investment to be turned back to cash. So, it is considered to be current kasi it is within the operating cycle. So, let's say, gagawa ka ng beer. Ang operating cycle mo is, let's say, 2 years. Siyempre, ferment mo yan. So, bibili ka ng barley, bibili ka ng kung ano-ano. And if ferment mo siya for 2 years, then after ng 2 years, makukuha mo na siya, mabebenta mo na siya. Then it is within the normal operating cycle, then it is considered to be a current asset for that entity if they elect to do or to use that business cycle, then uh, 2 years is their normal operating cycle, then current assets yung mga yun. Letter B is held primarily for trading. So, syempre, kung bibili mo siya, then kung bibilhin mo siya and you are intending to sell it as soon as possible, then it is held for trading asset. Current liabilities yun. Letter C, due to be settled within 12 months after the reporting period in the absence of normal operating cycle. Ito yung susundin natin. And letter D, the entity does not have an unconditional right to defer settlement of the liability for at least 12 months after the reporting period. Okay. So, yung letter D, discuss natin siya after nito. So, all other liabilities as classified non-current kung hindi siya pasok sa mga specifications na to. So, the operating cycle of an entity is the time between the acquisition of assets for processing and their realization in cash or cash equivalents. So, when the entity's normal operating cycle is not clearly identifiable, the entity is assumed to be 12 months. So, liabilities that are settled as part of the entity's normal operating cycle, trade payables, and some accruals for employee and other operating costs are presented as current even if they are expected to be settled beyond 12 months. So, gaya next ng explanation natin kanina, kahit 2 years pa siya, basta within siya sa operating cycle niya, as part of entity's normal operating cycle, it is considered to be current. But letter E is very unusual, especially sa current business practices. Walang gumagamit ng A. Usually, B and C lang talaga. Okay? Liabilities that do not form part of the entity's normal operating cycle or the non-ops liabilities are presented current only when they are expected to be settled within 12 months after the reporting period. And yun daw mga liabilities na hindi nagpa-part ng normal operating cycle, even though the entity elect na gamitin yung normal operating cycle as their calendar year or their fiscal year, those liabilities outside the normal operation is considered to be current only when they are expected to be settled within 12 months. So, mag-a-apply sa kanya to in letter C for non-operating liabilities. Okay, so example of current liabilities, financial assets measured at fair value through profit or loss, held for trading, current version of long-term notes. So these are due within 12 months. Trade and accounts, trade and notes payable. So unless since trade siya, so part siya ng normal operating cycle, then kahit yung trade accounts na to is umabot pa ng 2 years, for as long as part siya ng normal operating cycle, then it is a current one. Okay? Thirdly, other non-trade payables due within 12 months after the end of the reporting period. Kung non-trade naman, dapat within 12 months for it to be considered as current. Letter E, unearned income expected to be earned within 12 months after the end of the reporting period. And letter F, bank overdrafts. So, bank overdrafts, technically, ano yan? Nag-over ka ng issuance ng cheque compared dun sa actual balance mo sa bank. So, sa Pilipinas, bawal yan. Ang tawag dyan sa Pilipinas is bounce checks. Okay? So, walang bangko na mag-i-issue ng excess dun sa pera na nasa loob ng account mo. So, magbabounce lang yun. Okay, so trade questions regarding dito. Okay, so if wala, tuloy tayo. Trade and non-trade payables. So, I think discuss na natin to. Normal operating cycle lang. Okay. So, accounts payables are not supported by formal promises to pay the debtor. Hindi siya supported sa ganong klase ng like yung may notes pa or kung may ano-ano pa. Usually, evidence lang to by invoices, yung accounts payable, okay? Notes payable, obligations, ito na, supported na siya by notes. Loans, supported by the banks. Bonds, meron tong bond indenture. Liabilities under trust receipts, corresponding liability to the bank is paid. The goods are released to the buyer. Okay, so bank and trust usually, inaano lang yan, ina-assure ng bangko na you are able to pay under the trust receipts. So this is included in payment in accounts. Okay? So instead na ikaw magbayad, ang magbabayad is yung bangko. Okay? And other payables arising from sources other than purchases and borrowings such as dividends. Okay? So payables to mga to. So itong mga illustrations na to, kung ano yung current and non-current, or kung ano yung included sa current liabilities, basahin nyo na lang siya. Kasi maintindihan nyo naman yan. May mga answers naman yan sa baba. But sagutan natin yung number 1. Okay? Ilan ba to? Wait lang ha. Okay. Hindi lang pala. Okay, sagutan natin yung number 1. Sorry. Number 1, okay. So, yung 300,000 na to, ang sabi dito is net of debit balance in supplier's account of 5,000, net of unreleased check of 4,000, and net of post-dated checks of 2,000. So, yung 300,000 na to, dapat ibalik natin lahat nung na-deduct sa kanya. Yung mga na-ineto sa kanya, kailangan natin ibalik. Why? Net of debit balance in supplier's account. So, yung debit balance in supplier's account is actually an asset. Asset siya. Kasi technically, you have a receivable sa supplier mo. So remember, supplier's normal balance is credit. Kasi may babayaran ka sa kanya, may utang ka sa kanya. So hindi mo dapat ineto or hindi mo dapat i-offset yung debit balance dun sa credit balance niya. Kasi this debit balance should be presented as receivable separately sa payables. Okay? So we have to add it back. And yung unreleased checks, since hindi mo pa nare-release yung cheque, but when you pay using check, ang nagiging entry kasi natin, di ba, is enter natin. Sorry. Kapag ka nagre-record ka ng check payment, ang nagiging entry natin is debit AP. Then, credit ka ng cash, di ba? So, since yung check na to is unreleased, yung debit AP mo na 2,000, kailangan mong i-add back siya para ma-reconcile mo yung current liabilities as of December 31, 2020 or 2021. Okay. So, kailangan mo siyang i-add back. So, you had to reverse yung entry na to. So, mag-credit ka ng AP and debit cash. So, masasama rin yan sa bank reconciliation. And net of post-dated checks. So, since it is a post-dated check, it cannot be encashed for current date. So, may encash mo lang siya on specified date dun sa post-dated checks, which is obviously not December 31. So, again, kailangan mong i-reverse yung entry mo back to so, magde-debit ka ulit magde-debit ka ng cash. DR cash and CRAP. Para naman, maibalik mo yung 2,000 na to sa liabilities. Okay, so na-add back na natin siya, 311 na siya, di ba? Okay na siya. So, credit balance in customer's account. So again, for customers, ang normal balance naman niya is debit since you are recording receivables dun sa mga customers mo. But if there is a credit balance, then you have a receivable on them. So tama lang na ilagay mo siya dito. Liabilities siya. So instead na receivable yung record natin, nagkaroon pa tayo ng payable sa kanya. Okay. Next is financial liability designated at fair value through profit or loss. So kasama yan. Financial liabilities yan, current liabilities din. Letter D, bonds payable maturing in 10 equal annual installments. So 100,000 yung due within the next month because within the next year. Kasi there's a 10 equal annual installments. So i-divide lang natin by 10. Then we will have 100,000. Letter E, 12%. So, nandito naman yung computation kung paano na-compute yung interest. So, included siya. Unearned rent, again, hindi siya financial liability. So, hindi natin siya isasama. And, no. Ang tanong pala dito is liabilities. Hindi financial liabilities. So, kasama siya. Ang hindi kasama is yung contingent liability kasi for contingent liability, we are not required to create an entry or to record or to recognize. And same with reserve for contingencies. So yung reasons, nandito naman siya sa baba. Okay, so for illustration to try it yourself, nandito din naman yung solution. Okay. So tuloy tayo dito sa refinancing agreement. So a long-term obligation that is maturing within 12 months after the reporting period is classified as current, even if a refinancing agreement to reschedule payments on a long-term basis is completed after the reporting period, but before the financial statements are authorized for issue. So however, the obligation is classified as non-current if the entity expects and has the discretion to refinance it on a long-term basis under an existing loan facility. So ito yung Q dyan, existing loan facility. So dapat yung loan facility is existing at the end of the reporting period, which is December 31. So, lagi tayo ng text. Every time na sinasabi is end of the reporting period. Ang okay dito is laging December 31. Unless specified kung ano ha. Lagi niyong tandaan yan. However, the obligation is classified as non-current if the entity and has the discretion to refinance it on a long-term basis under the existing loan facility. So meaning, dapat yung existing loan facility na to is existing na siya noong December 31 pa lang. But if the loan facility is only existed after nung reporting period, which is January 1, so hindi na siya, even though you have the agreement on January 1, but the facility is not existing on December 31, then you cannot consider it to be a non-current liability. Okay. Let's see an example para mas ma-visualize nyo kung paano siya nag-work. Okay, so ABC has 10% 1 million loan payable as of December 31, maturing on July 1. Interest on the loan is due every July 1 and December 31. So, in case there is no discretion, meaning the discretion does not belong to the entity but on the bank. Okay. On February 1, 2022, ABC Company entered into a refinancing agreement with a bank to refinance the loan on a long-term basis. Both parties are financially capable of honoring the agreement's provision. So, ABC's financial statements were authorized for issue on March 15, 2022. Okay. So, for it to be recognized as current, dapat daw yung agreement must be dito. refinancing agreement to reschedule payment on a long-term basis is completed after, remember ha, after the report. Sorry. Wait. So, sorry ah. So, ang sabi dito, a long-term obligation is maturing within 12 months after the reporting period. It is classified as current even if a refinancing agreement to reschedule payments on a long-term basis is completed after. So, whenever we say after the reporting period, it is, susulat ko para hindi nakakalito. So, after the reporting period, lagi na yung January 1. Unless stated again. So, huwag yung makakalimutan na end is December 31, after is January 1. Okay. So, however, if the obligation is classified as non-current, so, ibahin muna natin yan. Ito muna tayo. Malilito kayo. Wala pa naman dito yun. So, on February 1, the entity entered into a refinancing agreement with the bank to refinance the loan on a long-term basis. So, both parties are financially capable on honoring the agreement. ABC's statement were authorized for issue on March 15. So, tandaan niyo itong March 15 na to. Okay? Kasi ito yung date kung kailang yung FS is authorized for issue. Balik tayo. So, ang sabi dito, long-term obligation maturing within 12 months after the reporting period is classified as current, even if a refinancing to reschedule the payment on a long-term basis is completed after, this dapat within January 1 until March 15. So, yung date is February 1. So, pasok siya, di ba? Pasok siya dun sa after the reporting period but before sa FS were authorized for issue. So, ang tanong dito, how much is presented as current liability in relation to the loan on in ABC's 2021 year-end financial statement? So, ang sagot is yung buong 1 million. The refinancing agreement is not at the discretion of ABC. So, the current maturing obligation is presented as current liability. So, yung discretion, wala naman sinabi rito kasi na ang discretion is na kay ABC. So, ang discretion is on the bank. Okay? So, even though the facility is existing on December 31, which is not stated naman dito, hindi pa rin siya sapat para ma-recognize mo siya as non-current since the discretion is not here, not on the bank, not on the entity, and walang existing facility na isinabi dito as of December 31. So, it is very unlikely na maging non-current siya. So, that's why current liability yung classification niya dapat. So, next, with discretion. So, meaning, yung discretion is nasa entity na. So, on same date, ABC entered into a refinancing agreement with the bank to refinance the loan on a long-term basis. So, both parties are financially capable of honoring the agreement, and ABC has the discretion to refinance all roll over the loan for at least 12 months from December 31 under an existing loan facility. So, meaning, on December 31, there is already an existing loan facility, and the discretion is on the company. So, nothing can hamper the entity's discretion na i-refinance siya on a long-term basis. So, in that case, the refinancing agreement is at the discretion of ABC. The loan is presented as non-current. Okay? So, unlike dito sa nauna, dapat current siya kasi una, the discretion is silent. So, probably nasa bank yan. And loan facility is not also mentioned. So, wala yon. Unlike dito, which is clearly stated naman siya. So, non-current yung classification niya. Okay. So, case 3. refinancing is completed as of end of reporting period. So in this case naman, hindi na yung discretion at saka yung loan facility yung focus natin. Ang focus naman natin dito is yung timing kung kailan na-enter yung refinancing. So on December 1, 2021, ABC entered into a refinancing agreement with the bank to refinance the loan on a long-term basis. So the refinancing rollover transaction was completed on December 31. So meaning, before the end of the reporting period is nakapag-enter sila ng refinancing agreement which make the payment of the loan on a long-term basis. Hindi na siya current. So in that case, the answer is none. So walang current liability na ipipresent for that year because the refinancing is completed as of the end of reporting period and the loan payable is presented as non-current. Okay. So, nagigets niyo ba yung yung Q niya? So, una, dapat facility is existing as of December 31 and the discretion is on the company. The other one is dapat yung refinancing is already completed as of the end of the reporting period. Okay, so case number 4, with discretion and interest payables. So, same pattern lang daw, annual interest July 1 and December 31. On February 1, 2022, ABC entered into a refinancing agreement with the bank to refinance the loan on a long-term basis. So, same, ABC has also the discretion to refinance the loan. And the FS is authorized for may loan facilities din. And the FS is authorized for issue on March 15. So, how much is presented as the current liability? So, ang current liability lang dito is yung interest. Okay? Kasi, yun lang yung kailangan mong bayaran or yun lang yung current as of that year. Because the 1 million liability is non-current due to refinancing is at the discretion of ABC and the loan facility is existing under in the entity under December 2021 financial statement. Okay? So, question. May question ba regarding dito? Sa refinancing? Okay, so kung may question kayo and hindi nyo pa siya na-realize ngayon, okay lang. I-chat nyo sa GC kung may question kayo. Then, sasagutin ko sa GC din. So, liabilities payable on demand. So, ang tinutukoy dito na liabilities payable on demand is yung mga breaches of contract. Let's say, may covenant sa isang kontrata na dapat ang income mo is 1 million for this year. But if your income falls below to 1 million, then the existing loan is payable on demand. So, those restrictions are called covenants or attachment siya sa loan. Okay, so alam niyo naman yung literal meaning ng covenants. So, those are commands, mga utos, di ba? So, a long-term obligation may be payable on demand when a loan provision is breached. So, ito, na-breach na raw niya yung covenant. So, such an obligation is classified as current even if the lender agreed after the reporting period but before the financial statement are authorized for issue not to demand payment for as long as hindi niya ma-meet yung covenant under the loan facility. Okay? However, the liability is non-current if the lender provides the entity by the end of the reporting period, a grace period ending at least 12 months after the reporting period, within which the entity can rectify the breach, and during which the lender cannot demand immediate repayment. So if there is a breach of covenant within or at the end of the reporting period, but there is a grace period at least 12 months after nung reporting period, so meaning that is after January 1. Okay, tandaan nyo magkaiba yun. Liability will be current if yung breach of covenant uh, is breached at the end of the reporting period, or even if the lender agreed after the reporting period but before the financial statements were authorized for issue. Tandaan yun. And a grace period of at least 12 months after the reporting period. So meaning January 1 hanggang January 1 next year. So that would make the liability non-current if there is a grace period. Okay? So let's say an example. So on January 1, 2021, ABC took a 3-year 1 million loan from a bank. So the loan agreement requires ABC to maintain a current ratio of 2:1. So there should be a there should be let's say 200,000 current assets for every 100,000 current liabilities. So if the ratio falls below 2:1, the loan becomes payable on demand. So as of December 31, ABC's current ratio is 1.8:1. So na-breach na yung covenant. So that would automatically make yung loan to be due demandable. In case 1, obligation payable on demand. So how much is presented as current liability on ABC's financial statements considering walang changes? Then the whole amount, even though it is a 3-year loan. Okay? Case number 2, grace period received after year end. On January 5, 2022, the bank agreed not to collect the loan on 2022 and gave ABC 12 months to rectify the breach of the loan. How much is presented the current liability in ABC's 2021 year-end financial statements? The answer is still 1 million. The loan is presented as current despite the receipt of the grace period because the grace period was received at the end of the reporting period. Remember, dapat magkaroon kayo ng, as mentioned here, the liability is non-current if the lender provides the entity by the end of the reporting period. Okay? So, dapat at the end of the reporting period pa lang, may grace period ka na na-agree with the lender. If not, then the whole liability will still be current considering yung breach of covenant. Okay? Grace period received by year-end. So, on December 31, 2021, nagkaroon na raw ng agreement not to collect the loan and gave ABC 12 months to rectify the breach of loan agreement. So, in this case, wala na. You can still consider yung loan na 3-year as non-current because you have the right to rectify the breach of loan agreement for 12 months after the end of the reporting period. Okay? So, question regarding dito. Okay? So, basahin niyo yung general rule. So, a current maturing obligation is presented as current. So, that is automatic. So, the obligation is non-current if the refinancing is completed on or before the balance sheet date. So, which means December 31. Refinancing takes place after the balance sheet date but before the FS are authorized for issue and the discretion of the entity is if the discretion is in the entity under the existing loan facility at the end of the reporting period. Okay. Tandaan nyo yan Ito yung basahin nyo para ma-clarify sa inyo yun. So, ang ina-emphasize lang dito is yung mga adjusting events. So, in case na after the reporting period but before the FS is authorized for issue, and there are material adjustments or events that happen na makaka-apekto sa financial reports ng entity, then it should be considered as adjusting events. Okay? So in this case, ang hina-highlight niya rito is yung bankruptcy. No, bankruptcy. Hindi bankruptcy. Is yung ito, yung loan agreements, especially yung breach of covenants, yun yung hina-highlight niya dito. So if there is a breach of the contract, then that makes the liability current, then it is an adjusting event. Okay? So, nakakapala to. So, medyo maikli naman na. And the rest are examples na lang. Okay, so it's already 2 p.m. na rin. So, next week, so tomorrow pala, may quiz tayo tomorrow. So, bale, ang quiz natin will encompass yung mga na-discuss natin. Hanggang dito sa page 24, hanggang dito. So, hindi kasama yung trade accounts payable. Okay? Then, next week, Saturday, itutuloy natin yung discussion sa trade and accounts payable. And we will proceed na sa chapter 2, which is, ang chapter 2 natin ay notes payable. Okay? Notes payable. Okay. So, any questions? Kung may tanong kayo, i-chat nyo na lang sa GC natin, then I will answer. Offline po tomorrow. Yes, offline tayo tomorrow. We will only have our quiz for tomorrow. Quiz pa lang, hindi exam. Quiz pa lang. Our exams will be on September, sa economic, sorry. Sa academic calendar kasi natin, September 12 to 16. So, by 17, we will have our preliminary exams. Okay? Natin will be hanggang dito lang sa chapter 3. And 17, exam pa po. Natagdag pa ba tayo? I think isama na natin yung chapter 4. Hindi. Okay, mag-exam na lang tayo ng 17. Then 18, tsaka na lang natin i-agenda ko anong gagawin. Depende sa discussion sa 10. Okay, so ganoon na lang. By tomorrow, you will have your quiz for partial chapter 1. And next week, discussion tayo ng chapter 2. Okay, so 2 p.m. na. What time ang quiz? Actually, hindi ako nagbibigay ako ng time limit, pero masyadong malaki. Masyadong generous. So, from 9 a.m. to 5 p.m., pwede niyo siyang i-take anytime tomorrow. Kasi alam ko naman